Okay, good morning, everybody. My name is Oluyemi, and we're coming to you live from the stable of Digital Accountant and Associates. There are some things that are going about Finance Act. What are the changes? What are the things that those are the things we're going to look at in just short video, and everybody will have a full understanding of what it's all about. Then you can ask a question later in the comment section. We'll definitely respond. Drop your email for some tax advice. We'll guide you. Also, subscribe for you to get notification of our new videos upload on tax, finance, and investment generally. Today, we're going to talk about Finance Act. And Finance Act 2020 is a new act that amends most of the tax laws in Nigeria. Majorly, it's about 7 of them that are affected. In Nigeria, currently, we have about 57 tax laws in operations. Tax acts in operation. And this Finance Act affects the major ones, about 7 of them. And we're going to highlight and look at them one after the other, those ones that majorly impact. The general knowledge of Finance Act 2020 is that, it's only affects withholding VAT. VAT has moved from 5% to 7.5%. Is that the only thing that changed? You'll find out before the end of this video. It's about 7 acts that are affected, really, instead of touching the whole of the 57 acts, laws that talk about tax, that's guiding tax operation in Nigeria. But those tax, out of the 7 acts that this Finance Act really amends a little, is SITA, which is Company Income Tax Act. We call it SITA in our finance world. And then we have Petroleum Profit Tax Act, which is for petroleum company, PPTA. And then we have VAT, which is VAT, Value Added Act, Value Added Tax Act. Then we also have the Custom and Excise Management Act, which is for custom, import, and export of goods. Then we also have CGT, Capital Gain Tax Act. Then we have stamp duties. Then finally we have PITA, which is Personal Income Tax Act. So I've mentioned the 7 acts that this Finance Act affect. I mentioned the SITA, Company Income Tax. I mentioned the PPTA, Petroleum Profit Tax Act. I mentioned the PITA, Personal Income Tax Act, which is the one that affecting individual. I mentioned VAT, Value Added Tax. I mentioned the Custom and Excise Management Act. I mentioned CGT, which is Capital Gain Tax. I mentioned stamp duties. And so these are the areas we're going to look at in general, and then we look at them one after the other and see what are the changes that affected each of these 7 acts out of the 57 tax laws in Nigeria. Now, number 1 of them is SITA, which is Company Income Tax. How does it affect company income tax? Number 1 is interest and dividend is properly defined now, unlike what we have before. There's a proper definition of interest, dividend. As time goes on, you will see what we mean by that definition. In fact, the income of petroleum companies, also properly defined, and the dividend paid therefrom is also properly defined. And you can now know why they did that definition, why the proper definition is given. The second area that affects in SITA is TIN. There is need for every company to have tax identification number, which is what we call TIN, which I won't mention in detail because of time. I want to make sure I finish this thing in less than 30 minutes. That would help me. And I'm already running to 4 minutes now. We still have a lot to go. So there's TIN. Every company must have their TIN now and must display it on their correspondence with the tax authority. Tax authority in this regard is FRS. Fine, for sake of familiarity and ensuring that you are compliant, you can also display the same thing in your correspondence with the state tax authority. So TIN is very important and is mandated. In fact, it's mandated in Section 3 of the Finance Act. So TIN is tax identification number. You get it if you are a new company. If you are not a new company, if you are existing and you don't have it, make sure you get it. Definitely you have if you are filing tax, but then it's better you be sure and confirm that you are from your consultant or your accountant, or so whoever is managing your tax for you. So the other thing that is affected is insurance company loss carried forward. Before now, insurance company carried their loss forward for 4 years. but Section 16 of CETA is amended by the Section 3 of this Finance Act that the carrying forward of insurance laws is now indefinite until they clear all the laws that they made, that they carry forward. And yes, there's a detailed explanation about carrying forward of laws, which we will not bore you with there. Now, also, another amendment under this CETA, which is Company Income Tax Act. Don't forget, I have to mention it over and over again because I know people that will be watching this video might not necessarily have a management background or tax background. That's why I have to explain what the CETA means. And anytime, for the ease of pronunciation, I call it CETA, or most time, even in our word, we call it CETA. Now, another amendment that happened under this CETA that's brought about by this Finance Act is minimum tax is now 0.5. Minimum tax is now 0.5% of turnover of every company, not limited to insurance company is not included. No, every company now is the minimum tax. So the rigorous exercise of having a condition satisfy this certain percentage of asset is not done again. Simple calculation of minimum tax for every company is 0.5. Whether you are in any kind of industry at all, is 0.5% of your turnover is the minimum tax. And by minimum tax, we mean that if you don't have profit, if you don't have net profit to calculate tax on, you have to pay minimum tax to government. And then if you also have a very low profit computation, then you have to pay minimum tax on that. So that's another explanation that can be expanded upon. Another thing that we need to also note that is affected in this CETA is dividend paid from retained earnings. Dividend paid from retained earnings is now exempted from tax, from withholding tax, because of definitely it will have been subjected to company income tax. Of course, withholding tax is an advance payment of CIT, which is company income tax. So, a dividend paid out of retained earnings is now exempted. To move fastly to other one, I've mentioned the 0.5% of turnover for every company without using the different conditions in the old method. But now current method is that 0.5 of your turnover is the minimum tax. If you are paying minimum tax, if you are not paying minimum tax, just calculate the normal tax rate, which we are going to get to. The next thing is agribusiness that is less than 25 million. That business of less than 25 million turnover, they are now exempted from minimum tax. So if you are into agribusiness and your turnover for a year is less than 25 million, don't pay minimum tax. Don't say because you make loss or you just don't pay minimum tax. Now, another amendment is a popular one, especially in business world. If I told you, you would know what we call company income tax. When you prepare your profit and loss account, the net profit on it before tax, you charge 30% tax before. Now that has been segmented into 3 categories. We have categories of income from 0 to 25 million profit, don't pay tax at all. They say 0% tax. So any turnover of your business that is 25 million naira below, if you have business that is any turnover of 25 million naira or below, don't pay tax. The tax rate to be charged is 0.0%, and everybody knows 0 times 0 will give you 0. So 0% is the minimum, is the company income tax you have to charge. So if your business is running and you have a minimum, so the idea is to encourage business to grow. So if you have business that your turnover for a year is less than 25 million, don't pay tax. Just multiply your whatever you have with 0, whatever profit or net profit you have with 0, and you have 0 tax to pay. You can file nil return to government on that. Now the next bracket is any company that is any turnover that have annual turnover of above 25 million but less than 100 million. Above 25 million but less than 100 million, you have to pay 20% tax. Before this amendment of Finance Act, every company pay 30% of your net profit before tax. But now they are now saying, okay, based on your income, based on your revenue, based on your turnover, you are only going to pay 20% if your turnover is above 25 million but less than 100 million. The third and last bracket, those are the ones that are still remaining under 30% old rate. And those are the ones that are made above 100 million turnover. above 100 million turnover. Without wasting time there, we have to move to the next one. Now, there's no room for provisional tax, interim tax that we normally pay before. The amendment cancelled that provisional tax in SITA. Oh, provisional tax is at the end of the year. Oh, you don't want to waste time because you want to claim some things, some tax clearance and the rest. You now quickly go and pay based on the last payment of company income tax you made. They said no, going forward, nothing like that. Compute your return on time, file, and in fact you get incentive if you pay earlier in this new dispensation. And board is replaced with service. Service has been in use. They just document it into law now. So the next one is that interest on foreign loan, depending on the tenor and the structure of the loan, interest on them is not disallowable. But there are some explanations on each of these. But at least you have a very summarized form of what we have. That covers everything about SITA without wasting more time that you need to know. And the next one, we're going to go about PPTA, which is Petroleum Profit Tax Act. Now, going forward, dividend from petroleum profit company is now subjected to withholding tax of 10%. It's now subjected to withholding tax. So before now, it's not subjected to withholding tax, but now it's a dividend from petroleum company is now subjected to withholding tax. Please take note of that. Without wasting much time, we've covered like two of these law. We move on to the PITA, which is personal income tax. This affects individual, it affects sole proprietorship, it affects partnership business. Any business registered as a business name, or you are into partnership, or you are the only one running the business, not limited liability company. This is personal income. So the first thing is you have to get opt-in because you are running business anyway, but not individual. If you have business, you are running business. So this is talking about sole proprietorship. You have to have your TIN, but definitely you'll be filing your VAT returns. Then the next one under PITA also is that the email, whether it is express, courier service, and the rest of them, or physical documentation, submission of documents is now allowed. This has been legal tender really, even in the court of law, but now I think they are putting it in the law now that is now allowed, that you can actually submit your document through email, through courier service, or through physical submission. Now let's move to the next one, which is VAT. Now the area that Finance Act affects in the VAT is one, you have to register, which is key. That one is normal, and the penalty for not registering has now increased to 50,000 and on the first day of a failure, and 25,000 subsequent months. You have to also render return, which is also, if you don't render return in the first month, 50,000 penalty, and then subsequent month 25,000 naira per month. Then your return must be remitted the same 24 days of the new month. So last month's return must be filed within 21st of the new month. That's from 1st to 21st of the new month. Now, the general knowledge that everybody is shouting, oh, Finance Act, 5% VAT is now increased to 7.5. Okay, so I was talking about the VAT, and I said, of course, 7.5% is the new rate. So when you see your invoice, now, instead of it to be 5% from your supplier, they will definitely charge 7.5. It's according to the law, which is the noise. Then they also said now that supplier from foreign, if your supplier, before I go to the supplier from, if your supplier failed to charge 5% and this supplier is selling vatable goods or service, you are to charge it and you are to remit. So you are not only remitting the one on your sales now, you are also remitting for supplier that fail. So if your supplier has not charged what they need to charge, you need to charge and remit on their behalf. So definitely now bring us to what the law is, the Finance Act is also saying about foreign supplier. If you have a foreign supplier that has not charged VAT, the law permits you, the customer of that supplier, permits you to charge VAT on the invoice of that supplier and remit on behalf of that supplier to Federal Inland Revenue. Federal Revenue, they're the one in charge. That's Federal Tax Authority. They're the one in charge of VAT collection, remittance, and filing. So that's another amendment of the law which anybody is not talking about. And I think by the time the implementation comes by the end of the year, then there's going to be a lot of explanation around there where some people might not really be aware of this very silent information. So you have to charge it and do a self-remittance for them. And failure to do this, filing and every other thing that needs to be done is 50,000 naira from the first month, then 25,000 naira on subsequent month. Now let's move quickly without wasting time to CGT, capital gain tax. Now, compensation for the loss of office. This is in case of termination benefit compensation. So that is less than 10 million naira is exempted from CGT. It's not voluntary retirement. It's not terminal benefit. Terminal benefit is different of termination benefit. Terminal benefit, you are the one that retired, they calculate, and so this one is termination, which is termination of employment, which can lead to loss of office. Then, if it's less than 10 million, you are exempted from paying capital gain tax. Now, let's move quickly to stamp duties. Of course, as you know, bank has already been doing this, but now note, any of your deposit, any of your withdrawal, any of a transaction that's above 10,000 naira is what the bank should charge you 50 naira on, not anything below. Know that nobody should be charging you any money anyhow now. So it's only on transaction of 10,000 naira that stamp duty is supposed to be collected, which is 15 naira. So don't go and let anybody charge you arbitrarily or unreasonably. So this is the position of the law. Some banks have actually complied with this before now, but at least they are putting in black and white in law now that any transaction above 10,000 naira should be the one that's subjected to stamp duties. And the commencement of these acts, I've been able to summarize to a large extent, but I'll just do a general roundup. And the commencement of this act is 1st of February 2020. Of course, everybody in one way or the other started implementing, but then there will be some gap, maybe in terms of the time of kicking off and what we have been doing before. So at that point, by the time end of the year comes or tax audits come, or tribunal, we have to court, you have to really clarify some things there. But then it doesn't stop you from applying to the best of what you know, especially at that beginning period of the implementation. But aside from that, everything is clear. Do what you need to do, charge what you need to charge, remit what you need to remit to comply with the law. Otherwise, there is no argument that you can say on things that are so clear, that are not ambiguous in the law. So the law was actually signed. The act has been on. We've been hearing noise about it from 2019, last year. But now in January, it was signed into law in January 13 by the president, and then by the announcement from the finance minister, it become effective 1st of February 2020. Some sector have been asking for exemption, some clarification, but it doesn't stop the general knowledge of implementation. Thank you very much on that. But then let me put some things on notes that everybody needs to know. It might be something that we've mentioned before, not mentioned. Now, construction company, which is specifically defined in that Finance Act, those into construction of bridges, roads, buildings, and power plant, they are to pay only 2.5% withholding tax. Nobody should charge them 5%. I know there have been arguments on off and on this 5%, 2.5%, but now it's in black and white in the law. It's supposed to be 2.5%. So when your customer want to pay you as a construction company, specifically defined in that law, road, bridges, building, and power plant, you must ensure that they don't charge you 5%. They charge you only 2.5%, deducted from your money before they pay you. No company should take 5% from your money before they pay you. So construction company, please take note of that amendment. Then one of those things that we think this might affect really, it definitely might affect foreign direct investment, because now that they know that Nigeria is sitting tight on its tax law and tax collection. So a lot of other things were mentioned. Then what you need to know about this is read about the law more and make sure you know what's exactly in the law, and just align it with whatever you have heard from me. If there's anything you need to add, we can always talk about it. But then, without wasting time, considering the time we have, this is the summary and the summarized form of Finance Act 2020 as it affects 7 of our 57 tax laws in the country. And those 7 are major: the personal income tax, the company income tax, the Petroleum Profit Tax Act, the CGT, and the stamp duties, and the VAT. VAT is the one that makes noise, that will definitely probably affect almost everybody. Well, everything affects everybody in my own opinion. So the objective really of the law is to promote fiscal equity among companies, among individuals, among legal entities, both companies and individuals. And it's also to incentivize, it gives incentives to investment. There are some investment that actually not only negatively affect, they're affecting of foreign direct investment. They are positive, they are negative way. Because negative way in the sense that there are some part that government really want to make money. I can tell you for sure, 7.5% of minimum tax on turnover of every company is really larger than the graduated or the conditionalized percentage we used before. There are some aspect of the law that really encouraging small businesses to grow, like 0% is encourage 25 million naira turnover kind of business to grow, and when they grow into the next bracket, they pay only 25%, and when they grow larger into a larger company that make 100 million and above, yes, they pay 30%. So unlike this was not existing before, so there's a balance in sort of, but there's also an aspect that I want to earn more revenue for government. So the support SME, like I said, part of the thing I pen down here is also the support SME. And more thing that I also pen down is that it gives more revenue to government, which I've already mentioned. On this note, I want to say thank you for taking your time to watch. I know definitely you gain more than the general talk about what is in the Finance Act 2020, which is taking effect on 1st of February 2020. And if you have some comments, some things to add, just put your comment below and subscribe. Click the bell so that you can be notified. Or click the bell button so that you can be notified of our new video. In the subsequent days, we'll be talking about tax in other regions of Africa, even in developed world, as compared to our own tax. Did we do just copy and paste, or there are some amendment? Until then, peace out. We remain digital accountant associates. Through me, Oluyemi Akinfenwa. Peace.